Hey, welcome back to my channel. Welcome back to LR Options. If you're new, please take a moment to hit the notification bell so that you can be notified of all of our new videos. I'm going to be analyzing stocks, and we're going to be going through how the news, especially now with what's going on nationally, the health scare is affecting the stock market. Um, Let me go through some of the news going on through March the 13th. Schools were being closed across states. Shelves were being emptied at grocery stores. Hospitals started to report shortages on masks and personal protection equipment. The president declares a state of emergency. There is a ban on large groups congregating in New York State. New York State has a confirmed 400 plus positive cases, and I'm talking about the week of March 13th. Disney World announced that it will be closing. Justin Trudeau's wife was tested positive for the virus. Let me see what else. The mayor of Miami also. Hospitals were told to brace for a surge of patients. And the U.S. placed a ban on travelers coming in from Europe. And self-imposed quarantine was announced for 14 days. We're going to be analyzing charts because, as you know, beginners, charts tell a story, and by looking at charts, you'll have a better idea and understanding of what's going on with a stock. When is the best time to enter a trade or hold on to the trade already made? Okay, let's start taking a look at some of these stocks. Let's begin with, one second. All right. Let's begin with Bank of America. And Bank of America closed on March the 6th at 25.63, and it opened Monday of March the 9th approximately 23.45. Okay, it had up 2 red bars. It went down. There was a small green bar, but not enough to push the stock back up. The dominant here are the bears, so it's a bearish market so far. The stock fell a little bit more, continue to fall, and we're looking at the 30-minute time frame, and we had a green candle, pushed it up to 21.84 a little, then 2 red candles came in, and 21.69. Now, the market closed at 21.69 on that Monday, March the 9th. It reopened Tuesday, March the 10th, at 22.44. It gapped up. No, actually, it opened at 23.18, gapped up. Red candle continued to fall. So you saw 1, 2, 3, 4, 5 red candles. Then some green candles came in, so the bulls came into play, and they raised the stock a little. They pushed the stock up, and the stock continued to go up until the day closed at 23.55. Okay, so, and that continued on until the market closed. Let me change this into an arrow. Okay. Until the market closed on the 13th. Well, actually, the market closed the 12th at approximately 20:58, and then it gapped up on Friday, and it continued to go up slowly. And at the end of the day, Friday, the market rallied up to 24.02. So the market opened at the start of the week, opened at 23.49 and rallied and closed at 24.12. So actually the market was more up than it went down. But for a time there, it did go down. So you would have made money if you would have gotten out, if you placed puts, if you had traded some puts, and so the market opened at 23.45 and closed on Thursday at 20.51. But then it rallied back up at the end of Friday to 24.12. So let's look at another stock. Let's look at JP Morgan. And again, the market gapped down on Monday. It opened and 96, let's see what it opened at, 97.94 approximately. And again, if you would have opened a trade with a put on Monday, held on to it until Thursday, you would have made a profit because it opened with 98, at around 98, and then closed at 87.09. Okay, so you would have made a profit, but then if you would have held on to that, you would have lost some because at the end of the day, Friday, the market rallied up to 102.76 approximately. So you would have lost some money there. But if you would have pulled out in time, you would have gained some money. Your simple moving averages are all trending down, so your trend is going down. Let's see if there are any signs that, the only thing I see is that over here you did have some candles facing, some red candles coming in, bearish, and your first green candle gave you an indication that the market was on the way up. So if you would have held on to that, let's see, to that, place a call, held on to it until Friday, you would have made a profit. So that would have been, let's say, 88, and held on to it until 102. You would have made a profit there. Okay, let's see what else we have. But basically, that's what I like to look at. I like to look at, if a stock is trending down, I like to look at the pullbacks. Because the pullbacks will usually tell you if the stock is an indication the stock is going to continue down. And it normally does. Like over here, you have the stock is trending down. But you have a pullback over here. And you have another pullback. over here. Okay. And you see that the stock came down. If you would have held on to it for that long, you would have made a profit. And again, I like to look at candles that are going contrary to what the trend is doing. So here we go. Go up, and there you go. Okay, so let's look at, okay, we're looking at Applied Materials, AMAT. Again, the market on Monday of the 3rd of the 9th. Gap down, 55.14. And again, if you would have held on to that, if you would have placed a trade, held on to that, you would have made a profit if you would have gotten out on Thursday. Or if you like to take your profits earlier, then I like to look at pullbacks, because you've got a trend going down. Okay, I've got the arrow going the wrong way, but you've got a trend going down. And I like to look at the arrows going in the candles going in the opposite direction. So I like to look at the green candles, because normally the first red candle gives you an indication the stock is going down. So whether you would have made a trade in here, gotten in the trade in there, okay, gotten off, held it overnight, you could have gotten off here or gotten off here, you would have made a nice profit. Okay, and that would have been, let's say, 55.90, and held onto it until you got out at either 48.69 or 45.43, which would have been 10 points. 10-point profit right there. And again, as most of the rest of the market did, the Friday, the end of the day, the market rallied and it went up. Okay. And I believe that the market rallied in reaction to the news items that we just went over at the end of the week. Okay. Let's go back to Bank of America. Okay, now Bank of America. Okay, beginning of the week, same thing. The market gapped down from the previous trading day, which was Friday. Again, if you would have entered a trade, held on to it, would have made a profit if you got out of it a few days later. Or, like I like to do, I like to look at the arrows going in the opposite way of the trend. Let's say you end first red candle, there you go. Or at the end of the day, on March the 10th, you place a put trade. And then on the 11th, market opens, goes down. You can hold it for another day. It can go down some more. And then if you notice, again, Friday, a reflection on the market, stocks rallied up. Okay, so that's the end for this chart analysis for today. So today was a beginner chart analysis for JPM, simple moving averages. We looked at simple moving averages. We looked at how some candles that are contrarian to the simple moving average or the trend can also give you an indication of where the stock is going, and it's usually in the opposite direction. So please subscribe if you haven't done so already. Share, comment, and I'll see you next time. Bye bye.